Welcome back to Fair Value Study. Today we are breaking down one of the most surprising comeback stories on Wall Street, Cisco Systems, ticker Cisco. Written off as a boring old tech dinosaur just a year ago, Cisco is now trading near all-time highs. Wall Street cannot stop raising its price targets. So what changed? Let us dig in. The big shift happened on May 13, 2026, when Cisco dropped a bombshell earnings report. The company posted record quarterly revenue of $15.84 billion, up 12% year over year. Product orders exploded by 35%. The real headline here is artificial intelligence. Cisco now expects its AI infrastructure orders to hit $9 billion for fiscal 2026, a massive 50% increase from previous estimates. On top of that, management announced a strategic restructuring, cutting under 5% of its workforce to shift full focus toward the AI era. Now let us look at the numbers. Cisco is trading around $120 per share. Full-year fiscal 2026 guidance calls for revenue up to $63 billion, with non-GAAP EPS between $4.27 and $4.29. This AI hype has pushed its trailing PV ratio up into the 28 to 42 range, and its price-to-book ratio is now 40% above its 10-year median. Here is the tactical warning sign. Cisco's RSI recently flashed near 90, its highest reading in years. Any RSI over 70 means a stock is heavily overbought. Being stretched far above its 200-day moving average, Cisco faces a strong risk of a short-term correction. Despite the high technicals, Wall Street is in a massive re-rating mode. Major institutions like UBS, Morgan Stanley, and Goldman Sachs have all raised their price targets. The biggest shockwave came from HSBC. They upgraded Cisco from hold to buy, doubling their price target from $77 all the way to $137. Morgan Stanley pushed theirs to $120, and Evercore ISI leads the street with a high target of $150. While the average consensus sits between $105 and $118, the latest upgrades are rapidly pushing that floor higher. So what is the actual fair value? Traditional DCF models place Cisco's intrinsic value closer to $61 or $63, showing severe overvaluation based on historical cash flows. However, those models do not capture the massive AI infrastructure ramp, with fiscal 2027 AI revenue expected to grow another 50%. Cisco is no longer just a networking company. It is an AI infrastructure play. The growth is real, but the stock is technically overextended. At Fair Value Study, we always say, know what you own and know what you are paying for it. Stay sharp, and I will see you in the next video. Thanks for watching. Disclaimer: this video is for educational and informational purposes only and does not constitute financial advice. Stock investing involves risk. Please conduct your own research before making any investment decisions.